Are you looking to invest in real estate in 2022 for the first time and have no idea where to go? Then this video is for you. After watching this video, you're going to learn about all the tips and tricks and everything that you need to do to have the right fundamentals to strategically invest in real estate right the first time without causing massive headaches to your business. And it's all going to begin right after this. Hi everyone, Josh Tavares, investor and realtor with eXp Realty covering the Greater Toronto area. It means so much if you can help us out. Hit the like button, hit the subscribe button, and hit the notification bell to get updates on our newly uploaded content. And if you're looking to invest in turnkey passive real estate with great returns, cash flow, low price point, click the link below. Let's schedule a call and learn more about how we can get you closer to your financial goals. Without further ado, guys, let's begin. When investing in real estate, there's some things that you need to know in order to have a successful outcome investing in real estate and not getting discouraged so you can build your portfolio successfully the right way. Number one, get educated. Now, if you're looking to learn to become a successful real estate agent, there's many different ways you can be a part of different real estate meetups. You can buy different books, take different courses all online. Now, for us, we personally were part of RAIN, the Real Estate Investment Network, and we learned everything through the Acre book, from financing, building our team, how to invest in real estate, what neighborhoods to look out for, what market drivers to look out for to successfully invest right the first time. Whatever information that you're getting, you want to make sure they're credible, they've successfully done it, and be a part of a community of real estate investors that you can bounce ideas off and be able to be in the right headspace. When investing in real estate, you want to be educated and know about the economic fundamentals and pick an area that has great population growth, GDP growth, creating tons of jobs with low vacancy rates and low unemployment rates. By doing this, you're putting yourself in a great position in an area that has a lot of jobs with great quality tenants, that when you're ready to acquire the property, you're going to be able to get great tenants at great rents and who will take care of the property as well. All this information can actually be acquired online. You can go to StatsCan, you can actually go to the economic development website for any of the municipalities all throughout Ontario. You can also go to certain investment communities such as Rockstar, RAIN, the Right Club, and they'll actually make a top 10 list of the top areas to invest in for 2022 or whatever the year is. And those are usually really accurate areas that you can go at that has great tenants and great opportunity to build your portfolio the right way. Now, I know it can be really scary to get in the real estate investing realm and take in all the information, but there comes a point after all that information is absorbed, you have to apply and take action. Analysis paralysis is a real thing. And if you don't take action, it's going to prevent you from serious gains, as well as cash flow and so much more towards your financial security. Another important thing is building your real estate investment team, and they have to be investment focused individuals. So you want an investment based realtor, mortgage broker, accountant, lawyer, property management team, inspector, people who understand. By not working with individuals who have investment experience, it can actually set you back. For example, if you're working with a realtor who actually isn't investment focused or has no rental properties at all, they're not going to have the right clauses and they're not going to have the right whereabouts on how to find the right properties that you're looking for, like perhaps off-market deals, or have connections to find the right properties and understand the analysis in terms of what properties are good for you as an investment. Some realtors are just going to want a paycheck without having to actually invest into doing the homework and have the knowledge in place to help you make the best decision. Especially with your first property, can be critical in terms of duplicating purchasing multiple properties. You want to work with a mortgage specialist who has access to A, B, and C lenders, has access to hard money lenders, as well as private lending at higher rates. So then that way, they're able to structure very creative financing to get you in the best position to purchase multiple properties and or position yourself to have money left over from a refinance or whatnot, that you can go about renovating a property, appreciating it through the BRRRR method. And with working with a lawyer, you want to have someone who's going to look out for your best interest, who's going to understand how to properly look at liens, mortgage discharges, and looking at the condition of the property in a sense of making sure all the fixtures are in the right date, have the right clauses to best represent you. And also too, depending on your circumstance, you may want a corporation to have an investment focused lawyer who's going to understand the right corporate structure that you should get into or not, depending on your circumstance. Also, property management is super important. Personally for us, we don't look after our properties. We have property management doing that. We have no problem paying them 8% of the gross rents, so that way we can keep our hands clean and not have to deal with concerns. And you want a property management company that's reliable, responsive, and has access to many contractors that can help you out when things get a bit messy. Another important individual you want to have towards your team, as well as an inspector and everyone else I've listed, is also a paralegal in the event that things get a little muddy and you have concerns with tenants paying rents or property damages. You want to work with someone who's very focused on working with tenants, especially part of rental properties, so they're best able to structure and best represent you in any circumstance that comes in terms of tenant concern. This is number 3, super important. You need to understand your landlord and tenant board obligations, even if you're using property management, so you're best positioned to make decisions when things occur. I know there's many investors out there that actually don't know about the landlord tenant board, who actually manage their own properties, make their own leases with their own rules, work with tenants who are very savvy, and end up losing lots of money and end up getting into serious legal battles with the landlord tenant board and end up losing tons of money in rent, all because they had no idea and never educated themselves on the landlord tenant board rules. Even if you have a management team working by your side who can educate you throughout the process, that's great, but I highly recommend taking initiative and going about learning the different rules, so in the event that something takes place, you know about the different forms, you have the different strategies in mind, that you can bounce ideas back with your paralegal as well as property management, so you can be best positioned for success if anything occurs. And for some tenants, again, in rental property, it becomes very challenging because it is very tenant focused. If you get a tenant who knows their rules and rights, who won't pay rent in full and cause a lot of headaches, it can cause you as an investor many sleepless nights. So you want to make sure that you do the right due diligence, and that's why for some tenants it becomes very challenging, because the same process that can be very daunting when acquiring paperwork for financing is similar process that landlords are anticipating from tenants in order to have them rented out. Now, that's not something that you can require, but at the end of the day, the housing market is so much on investors' side that either tenants play ball or they don't get the housing. Next important step, once you've got your team, you've got the knowledge, you understand the rules, landlord tenant board, you want to make sure that you get pre-qualified. And I highly recommend, guys, that you work with, like I said before, you need to work with a mortgage specialist who has access to a plethora of different lending products. It can't just be your own bank that you go to. They only have their own products and services that may not best be suited for you. By being pre-approved, you're going to be in a fantastic position that once you see a property that makes sense, you're officially approved by the bank, that you can go to the listing agent and have your realtor represent you and say, hey, my client's pre-approved, they can qualify for this much, they're going to be excellent investors to take on this property from your investor. This is going to be a slam dunk, because many people get into this without getting pre-approved, work with the realtor, put in an offer, and sometimes on closing they can't close on the property. That can lead to many legal issues. And remember, financial pre-position and pre-qualifying are two different things. Pre-qualifying is essentially the lending institution saying that, yeah, you can qualify for this much. Pre-position is having it in writing and having them go through your full credits checklist to say, hey, this individual is ready to go. They've got a great income, credit. Here's what they can afford on the high end. So you want to make sure you're pre-qualified if you want the best chance to win, because in multiple offers, if you're not pre-qualified, that's going to hinder you. And if you're not pre-qualified and you're going into these deals without knowing exactly what you can qualify for, you're going to be wasting your team's time, which can really impact how much they're going to want to work with you. As soon as any of your team members feel like you're wasting their time and there's no benefit for them, they're going to completely cut ties and they're not going to want to work with you. Now, the next important thing to do on this list is start viewing properties. Now that you've been pre-positioned, it's a fantastic time that you can go about looking for properties, whether you're looking for a single family, you're looking for multi-unit, or you're looking for duplex, triplex, or whatever it is that you're looking to get into. And now we're looking at properties, going back to the knowledge phase. You want to understand the rents that are taking place and know the expenses roughly. So when it's time to purchase a property, you'll have a complete idea as terms of the expenses for utilities, for everything else associated, as well as the rents you can acquire, to see how much you'll cash flow realistically. So I highly recommend that you really do a lot of research, do a lot of mock properties where you look at MLS, look at properties based on the average expenses of utilities, insurance, mortgage, property tax, everything as such, so that when you begin looking for properties and actually purchase a property, you'll have a realistic overview as to what it's going to cost. Feel free to work with other investors who know rough costs of what those are going to be. This is something that I did when I began investing in real estate. I was doing as much research as I could to understand what normal costs would be, normal rents, so then when I go about looking at a property, I know exactly what to look for in terms of the property type, the number of rents, the utilities, the expenses, and try to be conservative, so that way I'll be in the best successful position to go about purchasing a property that's cash flowing and doing it right the first time. Now, I highly recommend the property you should also be looking for properties that need cosmetic repairs. Essentially, they need paint, they need some new blinds, they need flooring, anything as such is going to increase the value of the property. So within a short period of time, especially after you get tenants, you'll be able to refinance and be able to get that money back so you can duplicate to multiple properties. So this way you'll have a smaller opportunity to cap out and have a better opportunity to be at a better standpoint that you can duplicate, get more cash flow, and be able to be at the right trajectory to multiply. Now you're looking at properties, you've officially found the property that makes sense in terms of cash flow and everything as such and costs associated. You want to go about and look at the utilities cost or the costs associated with the property from the owner of the property. Maybe see slips of their utilities, property tax, insurance, so you can gauge if this makes sense, and you can have conditions in place that say they need to provide this within this time frame. Of course, given the market, you need to work with how the market is going. If it's a buyer's market, you can ask for more. If it's a seller's market, you'll have to withdraw some things such as maybe inspection or an appraisal. But during this time, I recommend if you can get an inspection, because it is a rental property, you don't want to inherit something that is an issue that could have been avoided had you had an inspector. So that's something I always recommend, is getting an inspector to look at the property and to be able to give you the thumbs up to say, hey, this property is in great condition, go ahead and do what needs to be done based on electrical, plumbing, anything mechanical. So, because if not, this could save you a ton of money. You've been pre-qualified, you've searched for properties, you've got the neighborhood, you have the property on contract, now you got to go about closing. And within closing, especially if it's a property that you're going through the BRRRR strategy, which is buy, renovate, rent, refinance, and repeat, you have the ability now on closing to own a property that you can go about doing your renovations or anything like, whether it's you or contractors, to increase the value, and then you'll be able to multiply there on forward through refinance or the BRRRR strategy. That's probably the best way to go about multiplying. If you're going to go about purchasing a turnkey property, then it's going to limit you, because you're essentially going to buy a property that's market value, and it'll be harder to refinance right away. Where if it's a property that's undervalued, you'll have a better opportunity from equity increase to refinance the property and help duplicate to multiple properties, setting you up for the right trajectory right off the bat. Hey guys, I hope that video was super helpful, insightful, and gives you all the information that you need to begin investing in real estate in 2022. I'm Josh Tavares, investor and realtor at eXp Realty. Once again, it'd be fantastic if you can help us out and hit the like button, hit the subscribe button, and hit the notification bell to get updates on our newly uploaded content. And if you're looking to invest in real estate, turnkey, great appreciation, great cash flow with the ability to scale and multiply, click the link below. Let's get in the conversation, show you how you can multiply and live a better life through investing in real estate. Anyways, thanks for watching, guys. Take care.